Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Chartbusters. This is the show where we highlight all the buzzing stocks of the day, get you expert advice on how to capitalize and trade on these stocks. But as we speak, the Nifty just kissing that 10,500 mark, not doing too much, opened in the green and then moved into the red. Now we're back at that 10,500 mark. Let's see what happens. It is the expiry day. Nigel, hi.
Hey Mangalam, you're talking about kissing, looks like you're all set for
nothing of that.
you're all set for New Year, it seems, but we have an expiry to get through first, and then in fact it's going to be quite difficult tomorrow, or Friday, last working day of the year. Then you have salary that's going to come on the weekend. So, exciting times. But 10,500, well, we've had a good run in this year. Let's see whether or not we can end the year on a positive note. For the time being, the Nifty Bank, that's being a naughty boy actually. That's sitting with a cut, a relative underperformer. But we got an entire trading session to go, and being expiry day, final hour of trade is very, very crucial. First up, run you through all the top stories at this point of time. Copper prices climbed to the highest levels we have seen in the last 4 years, posting its biggest annual gains since 2010. Vedanta and Hindalco, both of them trade well in the green.
Bond yields rise as the government decides to borrow 50,000 crore rupees more than its budget target. The fiscal deficit under threat.
And Reliance Communications is up a whopping 100% this week post the announcement of the company's debt resolution plans. The stock, remember, also entered the F&O ban today.
Colte Patil jumps over 4% after the company enters 193 crore rupees agreement with KKR. The company will utilize these funds to reduce their 450 crore rupee debt and meet working capital requirements as well.
And Star Cement gains close to 6% as the company receives 158 crore rupees towards capital investment subsidy claims from the central government. The company will use this money to pay down some of their debt. Okay, all right. The Nifty is trading more or less flattish with the mild positive gain as we speak. The Nifty Bank, though, is under some pressure. So let's get in Ashwini Gujral. Hi, Ashwini. Good morning. 10,500 on the Nifty. Where do we go from here on the Nifty? And do you see some more weakness on the Nifty Bank? Would that be a shorting opportunity? Or do you think, in fact, we can find support at these levels?
See, the point is that the Nifty is at the higher end of its range. 530, 550, 10,530, 550. We have not been able to cross that. Bank Nifty has not taken any heart from, apparently good numbers. So that way, the problem for the day is that if Bank Nifty again starts to fall and take yesterday's low out, because you have, twin expiries, you could have a fairly strong day on the Bank Nifty on the downside. So either things are range bound, but if they start to break down, then the move is always over exaggerated. Given that, I think with a stop above say 550, all rallies should be sold into, particularly financials, because all financials are doing quite poorly in spite of opening higher. So that way, for the moment, Canara Bank is a sell with a stop of 370, target of 356. PNB is a sell with a stop of 174, target of 162. And STC is a buy with a stop of 180, target of 195.
All right, Ashwini, I'd like your comments on two stocks in particular. The first one is Hindustan Unilever. That stock is up 67% this year, and as we speak, hit a fresh record high at 1382. It's had a good 2017. From a 2018 perspective, what does Hindustan Unilever suggest? And secondly, UPL. Yesterday, Prakash Diwan, I remember, spoke about it in the fundamental picks, called it the Biocon of 2018. That stock too is at the high point of the day. What's your call on UPL, HUL and UPL?
See, generally if something has a good time in one time period, the next period, generally things tend to consolidate. We started this year on HUL at about 800. Now it's at 1380. If you have a similar year, you'll be at 2000. That appears a bit unlikely. As far as UPL is concerned, that's a different looking chart where it's gone through a large correction from 900 down to 680. So possibly UPL can get back towards 900. So between the two, I would probably buy UPL.
Star Cement is the company that's in focus in today's trading session. Remember, it's up close to around 5.5% in an otherwise flattish market. Now it's up nearly around 7%. Remember, the company has received around 158 crores towards the capital investment subsidy claims from the central government. To discuss that and more, we are joined by Mr. Sanjay Gupta, the CEO of the company. Compliments of the season, Mr. Gupta. Thanks so much, sir, for joining in. Well, in November, on this show itself, you told Mangalam and me, I'm looking to receive around 150 crores in the second half of the year. That's precisely what's happened. If you could tell us, sir, what was the total subsidy at the start of the year? You received 60 crores, I remember earlier. So currently, I think you would have received around 220 crores. What's the total outstanding subsidy? And are you optimistic that you can receive some more before the end of this fiscal?
You're correct, Nigel. We had a subsidy outstanding of 800 crore at the start of the year. This year, including this 160 crore, I have already received 230 crores.
All right.
So that brings it down to 570 crores. We are expecting around 150 to 200 crore further to come in next quarter, somewhere in the month of February or March. And there will be some accrual because transport subsidy this year is also continuing. So some accrual for this year, which we're expecting around 70-80 crores. So at the year end, if we receive around 150 to 200 crores, the outstanding will be somewhere around 450 to 500 crores.
All right. So if we get that right, Mr. Gupta, you will receive 150 to 200 more in the next quarter over and above the 230 that you've received this year already. Is that right? Right.
That's what our expectation is.
Then how does your balance sheet look like at the end of this year? You would have received 230 plus another 150, as you're saying, 370, 380 crore rupees. You have a total debt of close to 650 crore rupees. So what does your balance sheet look like by the end of this year with the debt repayments?
See, the long-term debt is around 425 crores, out of which this subsidy has already been paid. 150 we have already paid from this subsidy. So it is around 275 crores. The rest 200 crores is the working capital debts. So long-term debt will come down to around 275 crores. If we receive another 150 crores, it will come down to somewhere around 125 crores at the end of the year.
So, Mr. Gupta, you're saying including your working capital, your long-term debt as of today is what after repaying this 150 crores?
See, I'm excluding the working capital debt from this. Long-term debt is 425 crores.
Yes.
After repayment of 150 crores, it is 275 as of now. Okay.
Plus working capital.
And plus the working capital of 200 crores. Okay.
Okay. All right. Sir, the other important factor is this freight subsidy. I believe it goes out of the window in the next couple of months. If I'm not mistaken, it's in February or March. The freight subsidy goes away. What would your EBITDA number look like then for the next fiscal? Because I think freight would account for what, around 250, 300 rupees out of, the current EBITDA? You could correct me, sir.
Yeah. The entire freight subsidy is going to go off from January 2018. So we have exactly a month to go. And that is having an impact on EBITDA of around 300 rupees a ton, 350 rupees a ton. But what we are doing is we are rationalizing certain dispatches in most of the geographies where we are operating. We expect the impact to be only around 150 to 200 rupees on EBITDA. For next year, we are pretty hopeful that we'll be able to at least report an EBITDA of 1900 to 2000 rupees a ton. 1900
to 2000 rupees a ton. So last year you did an EBITDA of close to around 408, 409 crore rupees. With this freight subsidy going in and the rationalization that you're talking about, what could that EBITDA number look like on a like-to-like basis?
See, the like-to-like basis, we expect the EBITDA to be somewhere around 525 to 550 crores. 525 to 550 crores.
525 to 550 crores, right, sir?
Yeah.
That's FY19 EBITDA.
Yeah.
Okay. So, what about the sales volume growth? I think for the first half of this year, you've sold around what? Approximately 1.2 million tons. Is that right?
See, Nigel, the growth, there was the first half we have not grown. I think there was a degrowth of around 10% of the volume. We were expecting to actually report at least 7-8% of growth. We still expect that we will still report 5 to 6% of volume growth for this year, because in this year, as I said, because of transport subsidy going away, we are rationalizing a lot of dispatches in many of the geographies, and there will be certain geographies which will become unlucrative for the company. So we will be rationalizing our dispatches in those geographies. So this year, I don't think that we'll be able to report more than 5% volume growth for FY18.
So
FY19, we expect it to 15%.
So earlier you said that you expect to do at least 10%. So you're saying that now only 5% will be possible given the kind of degrowth or flattish performance you've seen in the first half of the year. So volume growth for FY18, now we should work with 5%. Is that right?
Correct.
Okay, all right. And for the next year, you're optimistic. You're saying 15% growth is what we'll see. What will be the absolute the absolute sales volumes you'll be targeting if we do that 15% growth for FY19?
See, I think we must be doing at least 3.3 million ton. Last year we did around 2.8. This year we're expecting to at least do 2.9. And then next year on that we will be at least be doing 3.3 million ton next year.
So the 1900 per ton EBITDA that you're talking about comes up to around 625 crores in terms of EBITDA in FY19. Is that a possibility? 625 crores on your operational profit given 3.3 million tons volumes?
We expect that if the volume is there, we expect that to be the number which you are saying.
Okay, all right. So very quickly, if you could tell us, your current capacity is 3.7 million tons. By FY19 or 20, you were telling us last time you're looking to expand the grinding capacity. So when will that expansion come on stream?
We are still working on that, Nigel.
Okay,
so we are still working on that, and we will be coming out with a grinding unit in Siliguri. We are trying to expand some of our debottleneck our clinker capacity from 2.6 million to 3 million ton.
Okay.
That work is also going on. So I think it will take around 15 to 18 months to complete these expansions.
Okay, and the grinding unit goes up by 1 million ton.
Yeah, 1.5 million ton.
1.5. So that will go from 3.7 to 5.2.
Yeah,
approximately.
it will actually the total capacity is almost 4.3, 1.5 million ton. If you add, it will be around 5.8 million ton.
All right. Thanks a lot, Mr. Gupta, for joining in and giving us all those details. That was Mr. Gupta of Star Cement indicating that he's received about 230 crores of subsidy this year, expecting to receive 150 to 200 more. And that means that his long-term debt, which has come down from 425 to 275, will come down further by the end of this year. We'll keep an eye out on the SEBI board meet that happens today. Yash is here to give us what's on the agenda.
Well, it will be the last SEBI board meeting before the union budget, and the board will have a heavy-duty agenda to discuss when it meets for its board meeting today. And now, just to put out some of the most important points which will appear on SEBI board meeting's agenda, we are given to understand that SEBI might reintroduce norms around disclosure of debt defaults for listed companies. Here, we are given to understand that SEBI might ask listed companies to disclose defaults on working capital loans within a period of 30 days. Also, it might ask these listed companies to disclose defaults on long-term loans within a period of 24 hours. Also, what we're given to understand is that SEBI might finalize norms around the listing of asset reconstruction company or ARC receipts. Just a small caveat here, it might only allow sophisticated buyers, be it in terms of qualified institutional buyers or alternate investment funds, to trade this new instrument of ARC receipts. Also, what we are given to understand is that SEBI might tighten regulations around credit rating agencies. If you remember, very recently, market regulator had floated a consultation paper recommending some of the regulations in this particular space, which essentially suggested putting a cap of 10% as far as cross-shareholding is concerned between credit rating agency. It had also suggested barring these credit rating agencies from having a board seat, a board representation, as well as voting rights on another credit rating agency. Also, it had suggested raising the minimum net worth for a credit rating agency to 50 crore from the current amount of 5 crore. So yes, a final call on those regulations could be on similar lines as the consultation paper. We are also given to understand that there could be some new regulations which will come in the mutual fund space, where SEBI might bar mutual funds or asset management companies from having a board seat on another mutual fund or asset management company. An independent company might might also be barred from buying more than 10% stake in more than one mutual fund or asset management company. Yes, so all these reforms or points of discussion will appear in today's SEBI board meeting. At 4 o'clock, there will be a press conference which will be addressed by SEBI Chairman Ajay Tyagi, and we'll keep you updated on the developments as far as this particular board meeting is concerned.
All right, Yash, and we'll be reaching out to you all through the day to get all those updates that you'll be bringing us. But let's move on then. We have been getting you the top stock recommendations from CNBC-TV18's Market Wallas. Here's another set of stocks that Mr. Tulsian, Prakash Diwan, Ambrish Palegam, as well as Mehrbun Irani are betting on for 2018. Let's hear them out.
Company is carrying out an expansion of about 175 crore, which should get completed maybe in 6 months' time. And in fact, in spite of such a big capex, company will remain a debt-free, because for the simple reason that they raised about 69 crores with a QIP, having made in the month of July at 776, and now the share is ruling closer to about 700 rupees. For FY19, I think that will be a real big explosion in earnings, and I won't be surprised to see an EPS of about 75 to 80 also for FY19, and that will really be a big kicker for the company to post growth in its top line as well as in bottom line. Maybe top line will show a growth of about 60-65%, bottom line will show a growth of about 80-85%. So taking that into consideration, share can give you a level of about 880 in next 6 months or so, which is now ruling closer to about 700 rupees.
What's good about this company is, one is, of course, the pedigree is very strong. And as you said, financials are in place. They have decent cash on the books, a debt equity ratio of just about 0.3. They would move into return ratios of 20% plus, 21% in the next year and a half. They are into castings and pig iron. They're two primary businesses. This is in a sweet spot, has a very good relationship with clients for long years, Kirloskar pedigree to back it. And interestingly, last quarter, some of the DIIs increased their stake in this business also. So I think it's probably in that stage where it's getting kind of, ready to take off. I would give it a target of about 145, 150 whereabouts.
Although ARPUs were not up to the mark, but subscriber additions are superb. So I think that will start paying off now. Because even if ARPUs move up by either, say, 10 to 15 rupees, that's a huge addition to the bottom line. All of them were getting decently low valuations, but with the Warburg-Pincus deal, we are clearly seeing that Dish seems extremely cheap as compared to Airtel DTH. I mean, looking at the valuations they're given. So that valuation gap also is there. So from that point of view, I think this stock can move up from current levels of closer to about 80 to 110, 120, which is a conservative estimate for possibly the next 8 to 12 months. But if you're looking at EPS for FY20, which I expect to be about 4.5, 5 rupees, I mean, at that point of time, you could possibly see the stock at much higher levels.
The company's name is Finotex Chemical Limited, which is also known as FCL. Let's put it this way, the company is one of India's largest textile chemical manufacturer, which provides customized solution to the entire gamut of activities in the textile sector. 22 crores equity, again I repeat, with zero debt. Promoters have increased their stake from 62% to 72% over the last 4 years. They declared a bonus issue in 2014-15 and have reserves of over rupees 100 crores. On an equity of 22 crores. I think with an earnings of 2.5 rupees coming in the current year, which can go to 3.8 as I lightly mentioned, the stock at 50.52 is a clear steal.
All right, those were the 4 picks of our Market Wallas, but let's move on. The excitement for InvITs, once expected to be a source of increasing liquidity into the infra space, seems to be abating. CNBC-TV18 learns that Reliance Infra is likely to call off its InvIT or Infrastructure Investment Trust listing plans for its road portfolio. Kevin Lee joins us with these details. Kevin, the introduction of InvITs began with a big bang announcement this year. Are they losing their sheen already?
Well, it would certainly seem so, because at the start of this year, 6 infra players were looking to list their assets through the InvIT route. Only 2 have followed through on that, IRB Infra and Sterlite. What I gather from sources now is that Reliance Infra is also now not considering the possibility of an InvIT listing anymore, because it's worried about tepid demand, especially from retail investors. Now, IRB Infra was the first company to list an InvIT earlier this year, and it has been trading well below issue price since then. So Reliance Infra is worried that there is not enough demand in the market for another road InvIT. Now remember, Reliance Infra had plans to raise 3,000 crores via the InvIT route in March. They revised this downwards to 2,500 crore rupees in May. They have approval from SEBI, but we've not really heard anything on that from them. After that, there are other players who have approval from SEBI, including MEP Infra, GMR Infra, and ILNFS Transport. None of them have gone for the InvIT listing this year as well. So we'll have to wait and see if we see an InvIT listing next year. We did write to Reliance Infra, who said that they will consider any form of fundraising that is appropriate for their shareholders, including an InvIT, but no news on an InvIT listing, at least this year, from these players. Back to you.
Okay, Kevin, thanks so much for that. Well, on that